And welcome. This is Mary Ellen McGonagle with the MEM Edge Show, coming to you each and every Friday afternoon, 5 p.m. Eastern Time, the show where we put you in front of where the action is in the broader markets. We have so very much that we can cover today. I'm just hoping that I can get to all of it. Let's take a look at the agenda and what we're planning to cover. Of course, we will begin by taking a look at the current markets. Where are we now? What are we anticipating? And where is the strength within the markets? Lots of shifting, very interesting dynamics that are taking place right now. All about earnings, we're going to take a look at some companies that have reported, take a look at some of the reactions so that we can gauge the potential movement in these companies that are due to report next week. And of course, we are going to focus on some of these better known stocks because those are the names that tend to move not only the group that they're a part of, but in some cases, the broader markets. We also want to take a look at this move into small cap stocks of the indices. The Russell 2000 was the top performer this week, over 2.5% advance, 2.9 to be exact. And you are going to want to poke around and take advantage. Some of these smaller names can have significant moves if they do have the fundamental soundness and a good-looking chart, of course. And then ways to determine when the uptrend is over. We'll cover that. I know it's going to be critical as investors. We're seeing quite a bit of frothiness in the markets as they continue to strike new highs. Also, I want to take a look at the healthcare sector. Last week we covered tech because of the Consumer Electronics Show. This week it was all about JP Morgan's healthcare conference. That's the world's biggest stage for healthcare companies where CEOs, CFOs come out and market analysts attend. So there are some very promising dynamics, not only because of this particular healthcare conference, but announcements made then did highlight some dynamics that are expected to continue to positively impact this group going forward. So let's get started. I'm probably going to pare back my market review because there are so many other things that I want to go ahead and get to. So we're going to start here with the broader markets, taking a look at the S&P 500. This is a daily price chart. And as usual, we are looking at some simple moving averages. The green is your 10, the red 50, the blue your 200 simple moving average. I want to see this index above this 10-day simple moving average and also have that moving average in an uptrend. That's your ideal dynamic. It is in place, indicating that the current uptrend in the markets is very much in place. Taking a look here, we have the relative strength, that RSI indicator, as well as moving average convergence divergence. That's your MACD. These are both momentum indicators. And we can see not only is the RSI above 50, currently it's above 70. And that's telling us that the markets are overbought. We can see that this condition can remain in place for a period of time, in this case, 1 week and then a couple of days. But it is with an eye toward at some point in time, there is an anticipated pullback, which would be very healthy at this juncture, given how fast and furious the markets are moving. One other thing that we can go ahead and take a quick look at is a weekly view of the S&P 500. The reason I'm pointing this out to you is because you're going to get even more in the way of framework and information. So when the RSI hits above this 70 on the weekly, you are going to want to pay a bit more attention. We're getting up to that critical 80 level. And from my work, a prolonged on the weekly of the RSI above 80 is significantly worth paying attention to. The MACD up here at 93, that's your black line, and you only have to go back to this significant pullback in the beginning of 2018. For those of you that may have not have been in the markets, this was a very parabolic move into mid-February, and from there, we did see a very significant drop. It took quite a bit of time for the markets to really recover from that. I'm going to be covering this a lot more in next week's MEM Edge show, because there were specific stocks that led us to this parabolic move back here. And then also, of course, the VIX was a big player. But we are going to want to use history as our guide so that we can know what to be on the lookout for a potential pullback that might or might not be significant. So that's the broader markets. Let's drill down into some of these sectors, and I'm using that candle glance view. This is a 2-month daily price chart of the various sectors among the S&P 500. So I'd like to populate that and then go ahead and add this RSI, that relative strength indicator. You, of course, can use other indicators of your choice, but for here, I want to see where the strength is, sorting it in descending order. We can see technology up here, so we are going to see strength to weakness among the markets. And if you follow my show each week, what we are on the prowl for is some sort of rotation and then confirmation. So let's take a look. Technology up here in the forefront. This group in 2019, the sector was up over 50%. By and large, the biggest outperformer in 2019. Dynamics are still very much in place for this continued leadership among technology. But let's go ahead and just move to the right here, and you're going to see some dynamics that I am finding quite interesting. One is the fact that utility stocks, take a look, they are now up here in the forefront. The utility sector is up 3.8% this week. And I'll tell you, I did drill down. This is an area that certainly a lot of higher yielding stocks are among utilities. It is generally viewed as defensive, but there are other dynamics at play here that are going to point toward continued outperformance in utility stocks. For those of you, I do have my MEM Edge report. I drill down quite a bit into these sectors, what the dynamics are, why they are currently outpacing, and the outlook going forward. There was one very big stock that is a driver, certainly, but there are other underlying dynamics. So we've been adding utility stocks. You can go ahead and use the link at the bottom of the YouTube show, and you can take a look, trial that report. But let's go ahead and move on. Take a look at some of these other groups. XLC Communications, all about Google. Google has been a big outpacer here in this particular grouping. Healthcare up here in the forefront. We are going to go ahead and get into some of the underlying reasons, not only why healthcare is outperforming now, but anticipate it to be an outperformer into the rest of this year. So going down into some of these other areas, I will point out to you also that the REIT stocks, they had been very serious underperformers for the last 2 months, picking up here over the last week. Let's take a look at the group chart to give you a little better perspective. Peaked in price back here beginning of November. This is another high yielding area, but we can see that over the last 8 trading days, the group has come back into favor, poised to break out of this base. And for those of you that follow markets super closely, you may have noticed that today housing starts were huge. The numbers for December were very big. They were the highest in 13 years. A lot of shifts and movement in housing. So 17% pickup in housing starts, 13-year high for those numbers. So I really want to be able to get down, drill into some of those housing stocks, because even though they have had some nice moves this week, there is still room for further upside. That's a really big number for that group, and certainly some stocks underlying can very well benefit. So drilling down even further beyond those sectors, we can now take a look at the broader market indices, the S&P, the Dow, the NASDAQ, and then some of these really high growth areas that I like to pay attention to, semiconductors, software stocks. I have the Russell 2000 here. And then transportation stocks, we want to keep an eye on that. These guys tend to be the first out of the gate for earnings, and a pickup in transports is generally good for the broader markets. And then biotech stocks. So again, using that same indicator and adding it, sorting the list in descending order, we can see, interestingly, IGV is one of the many software ETFs, but I tend to use it as a metric for software stocks. And we can see among tech and within the broader markets, these software stocks are real winners, and they have been. This is another one I'm going to take you through what the group has been doing. It was a very big winner taking us into, let me see if I can broaden this chart out so we can get a better view. Software stocks were big going into the beginning of December. We're looking at a daily chart of that IGV. Actually, we can see, more importantly, that they peaked in price back here in August. This is much more relevant, actually, and I apologize because this is a group that I'm all over. My MEM Edge report has the leading stocks within that group. So it did peak in price back in here at the end of July over global growth fears. And more recently, in November, it really picked up. So take a look at this really nice outperformance among software. Not all of these prior leaders came back to the party. There's a very select group, and you will want to be on top of that because the group dynamics, as far as earnings and continued corporate need for their products, cloud-based and so forth, should continue to drive this group higher. But let's go ahead, take a look at some of these other underlying areas. Transports, I talked to you about that. Another area that had been underperforming, but earnings driven. Some of the rail stocks, we're going to get into this with the earnings, are picking up quite nicely, which is really quite constructive. And so then we can just drill down. Oil continuing to be an underperformer despite Mideast tensions and other dynamics. So that is the market overview. From here, what I want to go ahead and do is share with you some earnings information, not only reported but also going forward. Before we get into that, we're going to take a brief break, and we're going to be looking at a preview of a video that was done by Larry Williams. So we will be right back after this brief break.
I'm going to tell you when the next bear market is going to begin. There will be a bear market, and it's going to begin and get really bad when we enter a recession. So the secret of staying out of bear markets is to watch out for recessions. If you can predict a recession or know that we're entering a recession, that's when you get out of stocks. Other than that, you really want to be a long-term investor. The long-term trend of stocks is up, except for when we have recessions. So recessions, huge impact on stocks. So watch out for them. Your trading, your investing will be so much better.
And welcome back. We are going to take a look now at some companies that are due to report their earnings this week. And they are, as I said, larger names, well known, that could easily impact the markets. So first up here is Netflix. They're coming out with numbers on Tuesday. This is going to be all about subscribership, not necessarily earnings. That's going to be the key metric. There are a number of newer players that have been giving Netflix a run. Disney, certainly, with their streaming. Comcast came out this week with their Peacock streaming service. So this is going to be widely watched. We can see the stock is in a nice uptrend going into earnings. You can also note that the expected growth prospects next year are 63%. So any kind of positive news for Netflix could easily propel this stock higher. Let's take a look at some other names that are due to report, and then we'll also pay attention to companies in their grouping that reported this week that could help guide sentiment going forward. This is Union Pacific, UNP, a very large rail stock. We're looking at a daily price chart, and a lot of times when you see stocks creeping up into earnings and hitting a new high, I would argue that they are what is called priced for perfection. This stock is up 4% for the week, but let's take a look at two rail stocks that already reported, and we can potentially get a little bit in the way of insight as far as potentially what it may do. This is KSU, Kansas City Southern, and we can see that they're up 3% today on very strong numbers. Take a look at the earnings dynamics should continue for further upside. The revenues lagged, but they did come in ahead of earnings. So we can see the stock really was flat. It was not similar to UNP that was up 3% ahead of their numbers. CSX is another company that already reported, another rail stock that already reported numbers. You can see this nice advance out of that report, but I would argue that UNP is really going to have to come in with some high numbers to be able to continue to propel itself higher. Pfizer, a big pharma stock, is due to report next week. And actually, I apologize, J&J is the big pharma, but we are going to take a look at Pfizer for a number of reasons. So let's take a look. J&J is up 3% on the week. They do offer a 2.6% yield, but the growth prospects really are only single digit. So this is another one where I would argue that they are priced for perfection, overbought going into their numbers. And then one last name that we can take a look at is American Express. This has been a very dynamic area as far as consumer credit processing, payment processing, and another company that is up for the week going into their numbers. So from here, what we can do is take a look at some of the companies that reported this week and really had very significant gaps up, because as that occurs, you will want to have a game plan as to how you may respond once that stock gaps up. Is it too late? I actually have courses that cover precisely this. And let's take a look at one company that reported this week and really had a rather parabolic move. This is Progress Software, PRGS, a small cap stock, came out with numbers. Interestingly, it was after the close yesterday, on Wednesday, and we can see the stock had significant gains subsequent to their release of earnings, this big pickup on volume. So now you might ask, is the stock, it's had a huge move this week. Let's take a quick look at the weekly chart, up 13% on the week. Now, what I'm going to do from here is take you down to an intra-day chart, because these can be helpful. They're not charts that I use on a regular basis, but they can be helpful for you when you are pondering how to treat or how to handle a stock after it's had a big pop. So what I like to do as well is go back historically. This is another earnings driven pop. You can see this particular stock has had the ability on this weekly price chart to continue to advance. So this is that 2018 correction where it dropped after a big move. But let's go ahead down into these intra-day charts and take a look. This was the release of the earnings that I talked about. So from my work, I'm using a 60-minute, 1 hour price chart, and I have a 5 and a 13 simple moving average. So this is going to be really quite helpful, because we want the stock similar to the indices and on any other daily, weekly, whatever moving averages you are using, you want that stock price to remain above that simple moving average, in this case shorter term 5, but also above the 13. So we can see, going back on this 1 hour chart earlier today, the stock just had a really parabolic well, this was about a 5% move in 1 hour. But you also want to pay attention to the RSI dynamics. The stock did pull back later in the day very constructively, which pulled it out of that overbought position. And take a look at the volume dynamics. Your higher volume is on your up hours in this case. So I would argue that as long as we stay above these moving averages and your RSI is up above this 50, despite the significant move, PRGS could have even further upside ahead of it. So that was one area. Let's take a look at another stock that had a very dynamic move this week in response to earnings, because this is anticipated given the market that we are in, as far as very frothy, a lot of overexuberance taking place, and it could very well carry into next week. This company is IIIN in steel. We can see this big gap up in response to earnings, huge volume, up another 7% this week. So had it popped yesterday, you may have thought you had missed the move. Let's go back to that same intra-day view and see if this can be helpful. So here's that big gap up in response to earnings. This company has been down almost 40% in 3 years. It's a real turnaround. Growth expectations are almost 300% for next year. So the numbers were quite positive, outlook also positive, but we can see this big gap up. Stock pulls back very orderly to that shorter term 5-hour simple moving average before advancing further. And we can see it spent the latter part of today really just base building and digesting this move. But hopefully you can see over this 2-day period how using this intraday chart can be quite helpful. This is for super short term traders, but it can, again, give you a sense of what to be on the lookout for. One other stock that we can just take a quick look at, because it had a really significant move, certainly over the last couple of days. This is Morgan Stanley, gapped up. The stock is actually up over 15%. Let's just take a quick look at the weekly here, and actually 10%. I exaggerated a bit. So, but we can see that this big 10% advance, take a look at the volume. And this particular move is pushing this stock out of an 2-year base. For those of you that follow my work, you'll know that the longer the base breakout, this consolidation period, and then a breakout, the longer historically your advance out of that base is in fact going to be. So we can go ahead back to the daily chart, take a look at that continued advance. It certainly is a bit overbought, but again, the volume dynamics indicate that there may be more potential upside. For those of you that really want to fine tune your entry, you are going to want to look for a little bit of a pullback, but for now, more upside ahead for Morgan Stanley. So let's go ahead. I want to go into healthcare. There's a lot going on. I talked about that JP Morgan conference this week. So what we're going to do now is take a look at some of the better known stocks within healthcare that really appear poised for further upside. There's a lot of cross currents and positive events that are taking place. And as we go through these stocks, you will see why I'm bullish on healthcare. So first stock up is going to be Eli Lilly. And let's go ahead and get out of this intraday. We can certainly take a look at the daily and see this nice advance here on this stock. The company came out with news this week that they are anticipating to produce or close each quarter of this year a deal that is between 1 to 5 billion, and by that I mean merger activity. And this is all about growth. These big pharmas are doing a lot in the way of merger activity so that they can promote growth within. So they did announce a merger this week. Take a look at this. I talked about those base breakouts. This is a weekly price chart of Eli Lilly. The stock did break out of this 1 year base on very big volume and is since adding to that. This is a bullish announcement the company came out with. That's one dynamic that is driving these stocks higher, is this merger activity. Let's take a look at another large pharma, and if I can get my cursor, but what we are going to be taking a quick look at here is BMY, Bristol-Myers, another well-known company, and they actually, this is one that we were able to pick up here quite early in our MEM Edge report, but it's still looking very constructive. This is a weekly price chart. They did get FDA approval this week for the first inline treatment for lung cancer. Huge news. This is now this is that weekly price chart, and we can see it broke out of this base very constructively. Another dynamic that is occurring among healthcare stocks is faster approval times. The FDA, they are making very pronounced efforts, reduced hurdles, particularly in areas of high demand, such as lung cancer. So this is another dynamic that's driving not only these big pharmas, but many biotech stocks as well. Let's take a look at another big name that had news this week that is in line with what I'm talking about. This is Pfizer. Pfizer and Merck have a drug that they are combined working on. It's bladder cancer. They had positive phase 3 trial study results, so the stock is gapping up. So again, more advancements as far as FDA approval coming through. We can take a look at one other company in healthcare that is taking advantage of newer technologies. This is another dynamic that is helping to propel healthcare stocks higher. This is Teladoc, TDOC. We're looking at a weekly price chart, another long-term 18-month base breakout. This company provides telemedicine services, so it's reducing the need for patients to go into actual doctors' offices. They've made great headway with health insurance agreeing to pay for that. 40% of hospitals that were polled said that they plan to increase this particular service because it's reduced cost, but it increases services to their clients. So I just covered with you 3 dynamics: technology, faster FDA approval, and merger activity that is driving these healthcare stocks higher. I would be remiss without sharing with you, last week I shared with you the move into Chinese stocks. They're hitting another new high this week. Let's take a look at some of the stocks that I shared with you last week, just to note with you that pay attention to momentum, how important it can be. This is GSX. The stock is up 25% this week. COE is another big winner. Pretty much every ADR in China is up this week, but the education stocks that were the strongest are up the most. And good news, I'd have time to drill down and take a look at some of these housing stocks. And what we can do as a way of uncovering that is go ahead into the sector summary. You want to go in from here to consumer, discretionary. Go ahead and take a look, because you are going to see other dynamics where healthcare improvement retailers, in response to the big move into these housing stocks, these companies are also going to benefit from that move. So let's take a look at home construction stocks. And I want to take a look at the weekly because there's been a lot of big movement. Hovnanian up 25%. And this is another one where you may think you missed it. I urge you, take a look at that daily and intraday. It will change your mind. From my work, I'm going to drill down a little bit down into small cap stocks are doing well. Scooter rating, that's that StockCharts technical rating. We can see that ideally, the higher the number, the better. But we can drill down and take a look at some of these smaller stocks that are these home builders that really have regional dominance. MHO is an example. This is a daily price chart poised to break out of a base. But from my work, I'm going to sort this by scooter rating and just make it a lot easier. You can hover over. I like to see stocks that are hitting new highs that have that relative outperformance. PHM would certainly fit that criteria. And we can see that the stock this week broke out of this nice 4-month base on volume, a little bit extended, a little bit overbought. But I would urge you, because those numbers that came out today are really quite significant. You can look for continued outperformance. Again, please trial my report, MEM Edge. I'm going to cover utilities, REITs, why they're up almost 4% this week, and what to be on the lookout for. I'm going to leave it at that. Happy trading.